Gold speculation reaches a record low. Could this be the perfect time to start acquiring gold assets? Amir Adnani, top resource entrepreneur and recipient of Casey's 10-Bagger Club, thinks so. In an environment where nearly 70% of TSX venture mining companies have a market cap of less than $5 million, Amir's new gold company, Brazil Resources, just raised $6.4 million through an oversubscribed private placement, with the biggest buyers being management, Doug Casey of Casey Capital Strategies, and legendary investor Rick Rule. BRI also just completed the acquisition of Brazilian Gold Corp, which will more than double their in-ground gold minerals. Brazil Resources seizing the opportunity. All right, greetings and thank you for joining us at FutureMoneyTrends.com. I'm here with the Mercenary Geologist, Mickey Fulp. He's the keynote speaker at many conferences, and it's a pleasure to talk to him. Thanks for joining us.
Thanks for having me once again.
Thanks. You know, I've been to this conference now for 4 years, and this is without a doubt lowest attendees, and we're missing about 50% of the vendors. You travel all over the world. What's going on with the sector? Is this what a bottom feels like for us young guys?
Well, I don't know if it's a bottom. You can argue it's a bottom because the venture index, which is probably the best proxy we have for our sector, hit a low in June, July, rebounded, and has been flat ever since. So you could argue that the beginning of the summer doldrums in June was a bottom. I would probably make that case. It's been treading water ever since. Concerning this show, yes, the vendors are down probably 1/3 of what they had during the boom days. The attendees are probably, I'm guessing here, 1/3 to 1/4 of what we had in the boom days.
Yeah.
But what you see on the positive sign there would be the quality of the companies. About 60 companies exhibiting here is much higher than we saw during the boom days. All the companies here have viable projects. They have, for the most part, strong management. They manage their share structure, and they have cash in the bank. So I think the conference made a conscious effort to attract the best of the best that remaining in the sector.
Now,
one other point, and I'll try to be brief here. Pardon me while I wax poetic. The quality of the investor here is much better. So what we've seen as the market's gotten tougher is the people that are here now ferreting out good deals are people who are serious about the business. They understand the business. So as the bear market deepens, the average investor we see is intelligent about the business, is educated, and knows what he's looking for. So from that point of view, it's positive.
it's very good. I've never thought about that side of it. I've always considered the companies, but yeah, you're right. Anybody who's going to show up to something like this, it's not anybody who's chasing a high-flying stock, because these aren't high-flying stocks.
And it's not the usual suspects at the San Francisco show,
yeah,
which were the bag ladies coming around to collect all the giveaways, and
yeah,
we don't see that anymore. Number one, there's not very many what we call swag in the business.
Yeah.
Not a lot of swag here anymore, but there are smart investors here who know what they're looking for, and they have an idea of how to approach some of these companies, and then they come here to hear the newsletter writers and the analysts and the pundits talking about their ideas about how we go forward in this business.
How's exploration going for these companies? Are discoveries being made? Do they have the capital to even move projects forward?
Discoveries are being made. There's been 2 or 3 new discoveries, significant new discoveries this year. Significant new nickel discovery, a significant new copper discovery, a new uranium discovery in the Athabasca Basin. So discovery is still being made, and it's being rewarded. What we are not seeing now is a trickle down to other companies in those areas or in those particular commodities. Very company specific at this time.
Yeah, I noticed even with this recent move down in gold, a lot of your higher tier companies, they really didn't budge. They kind of, maybe they were trading for around 70 cents and gold dropped another, $75, but they're still trading around 70 cents.
And
have the good companies bottomed perhaps?
I think the good companies have the shareholders who have a longer term view, and you and I are involved as shareholders and coverage of a particular gold company, Brazil Resources. Well, Brazil Resources has not dropped. It dropped from a base of about $1.10 about a year ago or so. It dropped to 70, 80 cents, and it's pretty much maintained that since. What they have is a cadre of very dedicated shareholders who are convinced their business model is going to work out in the future. And I see that with a number of companies that I'm associated with, good companies. They haven't gotten destroyed because they don't have a bunch of willy-nilly non-committed investors who don't think their business model is going to work. So from that point of view, everybody's taken a correction at best, if not a 50% haircut, if you will, or a 30% haircut. But the best companies, as you have alluded to, have kind of flatlined since then. I think that's encouraging.
What's something you look for at these shows? I mean, you go to so many of them. Is there anything that's specific when you come here? You probably know so many of these companies. They know you. A lot of them will pick up the phone and just call you to look at them or consult with them. Is there anything that you kind of particularly point out at these shows?
Well, what I would say about this particular show is I'm revisiting. So there's 61 companies, 60 some odd companies here. I got a list, and I'm going to go talk to all these guys now in these companies, because I probably haven't looked at them in a year or two or even 3. Yeah. Now they appear to be the survivors, so go in and see if there's an opportunity. The people that make money in this business are contrarians. Yeah. So this is the time that you buy, and I think probably your time frame needs to lengthen a little bit, but buy fundamentally strong companies.
Yeah.
If you buy them in stink bids or however you choose, buy them during down times in the summer, or when there's no news flow, buy those companies and figure that becomes a longer term speculation that I'm willing to sit on. If it goes lower, I can buy more and average down. I can put in stink bids to accumulate, but I want to be a shareholder of that particular company because this won't last forever.
Yeah. Well, one of my concerns is that the worst might not be behind us, because absolutely. Europe is in recession, China is slowing down, and we both know the fundamentals of the U.S. economy. They could keep the status quo going for a few more years. At the same point in time, it could dip into a severe depression if they lost control of the perception of the economy.
Point well taken. That's why we own gold, is it not?
Yeah.
That's why we have physical gold in our physical possession to as an insurance policy against what you just alluded to. Is the bottom in?
Well, for
not
demand,
for sure.
What are you seeing on demand side as far as, and I'm talking about everything for copper.
Well, so let's go to commodities that are important for the world economy, and certainly gold is not that. There is no inherent demand for gold. That's not saying we don't want to own gold, but there's no use for gold other than hoarding and insurance against financial calamity.
Yeah.
Copper. With China's slowdown, that was really an artificial slowdown. They chose to slow their economy down. They needed to do that. I don't think we're going to see what they had before with 8 to 10% growth.
Yeah.
But what are they at now? 7 plus or minus? I think the world is fine with that. Daniel, there are 80,000 more mouths to feed on the planet every day.
Wow.
And a significant portion of those people that are added to the planet every day live someplace where it gets dark and they can't turn on a light switch. 25% of the world still is not electrified. And a significant portion of that is in Eastern Asia, and that's changing.
Yeah.
That's changing rapidly. So I see an inherent demand for copper that's going to go until Asia is completely electrified, and then we come down to basically sub-Saharan Africa and certain parts of South America that are electrified. Now those markets are not as growth oriented at this stage. But there, you look at the increase in demand for copper year after year since 1900 has averaged about 3.5%. Now it's not a straight line, but it goes like this.
Yeah.
We have a couple of world wars that skewed that. We've had a depression, we've had a global economic crisis, we've had some major recessions, worldwide recessions, the Asian flu in 1997, our next to last attempt at world globalization affect that. But in energy, oil's still the king, and the world demands oil. We have new technologies, we have new frontier areas. We're going to find enough oil.
What do you think about the fracking thing? Because a lot of people are saying you got good people like Marin Kutus, or they bring up the cost is really high, the production falls, and then Stansberry is saying no, this is going to bring oil down to $25 a barrel because we're just going to keep producing.
I don't think we're going to see oil at $25 a barrel in any kind, let alone in constant dollars. I mean, in my opinion, we are saddled with plus or minus $100 oil for the foreseeable future. I don't see the amount of discovery that can. I'm not a peak oil guy. Mm-hmm. I'm a cornucopian, not a Malthusian. If you understand that difference, a cornucopian be somebody thinks when we need it, we're going to find it and have the technology to develop it. So I think that the paradigm of relatively high oil prices is the future.
Yeah.
At least certainly in the short term. I would say in the midterm, and I don't see it changing in the long term. So I'm not a peak oil guy, but I don't think we're going to find enough oil that we're going to reduce the price of a barrel of oil. You can go back to look at the ratio of gold to oil. In 1950, an ounce of gold bought you almost 13 barrels of oil. In 2013, an ounce of gold will buy you almost 13 barrels of oil. So that just tells you that gold retains its purchasing power. Mm-hmm. So $100 oil. Look at the range we've gone in and say the last couple of years, maybe pushing 3 years, $85 to $110 oil.
Do you see the U.S. as a net exporter in 10, 20 years?
Absolutely. Never underestimate the ingenuity of the American engineer. And that's what we've seen now. We could be self-sufficient if we had the infrastructure to do it. Mm-hmm. We need a couple of things in the oil business. We desperately need the pipeline, the Keystone Pipeline. We very much need that. That's a political decision tied up with Obama right now, with his necessity of appeasing the far environmental left. The environmental left needs an oil project to protest against, and they need an Alaska project. And they have that. Now they have the Keystone Pipeline. It used to be the Arctic National Refuge in oil. Now it's Keystone Pipeline, and their Alaska project is Pebble.
Yeah.
And so they have what they need to continue to raise funds to support their upper middle class lifestyle. So it's a game that has to be played. We need infrastructure. That's what's the problem with our gas business right now. We don't have the necessary pipelines and infrastructures and refineries or gas plants where the gas is.
Yeah.
So we have a glut of gas shut in.
Yeah. Mickey, thank you so much for joining us.